Should I move or improve? Should I buy or rent? Well, ahead of the busy spring home buying season, Sean Grisbin, head of mortgage originations at Chase, joins us to discuss the advantages of using a home equity line of credit to fund important life expenses, new products that help make home ownership more affordable, and tips for buying and selling. Good morning, Sean.
Good morning, Alex.
So let's hit on the buying market right now. How would you say that it is right now, and is it prime time for people to buy a new house?
The home buying market right now is in great shape. We expect it to be a very great and good market this year, and probably better than last year. So despite the fact that we've seen rates creep up a little bit, there's a lot of really strong economic indicators with job and wage growth and consumer confidence that have us very optimistic about buying a home in 17.
Okay, and a lot of people, sort of rode the refinancing wave when the rates were really low. And now that that trend is sort of over, what else do you see sort of rising up as far as trends go?
Well, the refi market is still there a little bit. Rates have gone up some and have impacted it. But one of the trends we're seeing emerge is home equity lines of credit. Our business in home equity has grown 40% year over year, and we expect a similar growth target in 2017 as customers take advantage of increasing equity in their homes.
And so what is a home equity line of credit, and how is it going to really benefit people?
A home equity line of credit allows you to keep your low first mortgage rate, which a lot of people are concerned about, but still take advantage of the equity in your home. It works a lot like a credit card in that we take the value of your home and your personal qualification, and we figure out a line amount that's appropriate for you today and in the future. And then you're allowed to draw on it similar to a credit card.
Okay, and what if people don't really have enough funds to sort of start into this? What are banks doing to sort of help them?
Well, we know that not everyone has 20% for a down payment. And so we've been working on some programs over the last 12 months to make it easier for customers to go ahead and realize that dream of home ownership. So we've created a program that allows customers to get into a home with as little as 3% down payment. And we've also created some great partnerships with local housing agencies to offer educational courses that get our customers to become informed about the home buying process before and after. And if they complete that course, we actually give them $500 towards their closing costs, which again makes things easier to achieve that dream.
That is easier. Every little bit helps. So what would you say people should do really to get prepared to applying for a mortgage?
The first thing to do is make sure your credit score is up to date. So pulling your credit score online at one of the free services is a great first step to get you grounded. Another thing is to get the documentation together. There are documentation requests involved, and I know that people sometimes are frustrated by it. So the best thing is to prepare for that early on. Get your tax returns, get your W-2s, get your account statements together. And then lastly, come visit one of our mortgage bankers. You can do that in a branch, you can do that online, or you can do that over the phone.
Well, certainly this is a topic that I'm sure many people find really hard to understand a lot of times. It's really, they think there's not a lot of information out there, but the fact is there is, and there's a lot of people willing to help them to realize their dreams and to really make their finances work for what they want to do. So, Sean, if people want to learn a little bit more, where should they go?
They can go to our website. It's chase.com/homebuyers.
Excellent. Sean Grisbin, thanks so much for your time this morning.
Thanks for having me, Alex.
Absolutely. Stay where you are, guys. Morning Blend's going to be right back.